Guarantor. It's a word that makes some people just cringe. But in today's video, I want to talk about the pros and the cons of a guarantor and give you my opinion as to whether or not I think you should use one. Hello guys, Brad here from The Guided Investor. Welcome back to another video, and if you're new here, consider hitting that subscribe button because I post regular videos about how you can do more with your money. Now, if you've purchased a house or if you're thinking about purchasing a house, then you've probably heard the term guarantor being thrown around because it's a very common thing. And so in today's video, I thought I'd cover off what a guarantor is and give you my opinion as to whether or not I think you should use a guarantor. Firstly, what is a guarantor? Well, a guarantor is someone who puts up assets as security for a loan. Now, this person is normally a family member, normally mum and dad, and the asset is normally a house. The amount of debt that they go guarantor for is usually the difference between your deposit and 20% of the value of the house that you're buying. Now, let me give you an example to explain a little bit better. Let's assume that you are purchasing a $400,000 house with a $20,000 deposit. Now, when you buy a house, as you'll probably know, there's lots of costs involved, with stamp duty being the main one. But the amount of costs are going to depend whether or not you're a first home buyer or which state you live in. So for the purpose of this video and for the purpose of this example, let's just keep it really simple and assume that this magical house has zero costs involved. So the only money that you're putting in is the purchase price of $400,000. Okay, so you buy the property with your $20,000 deposit, which leaves $380,000 to be financed. Now, at that level, you're looking at a 95% loan to value ratio, or LVR. Now, for most lenders, any LVR above 80% is considered high risk. And as a result, the lender's gonna want one of two things. They're either gonna wanna charge you lender's mortgage insurance, LMI, or they're gonna want additional assets as security for the loan. Now, lender's mortgage insurance isn't a great option because it's an extra cost that provides you no benefit. All it does is cover the lender. And in our scenario, lender's mortgage insurance would be roughly $12,700, which would get added on top of the loan. So it's a lot of money. So the other option would be to provide additional assets as security for the loan, and that is where the guarantor comes in. In our scenario, the guarantor would need to put up $60,000 because that's the difference between our loan amount of $380,000 and what the loan amount would be at an 80% LVR, which would be $320,000. The guarantor would remain on the loan until you've paid down that $60,000, at which point you can apply to have them removed. Now, if you're lucky, property prices might work in your favor, and if property prices go up, then you're gonna get to that 80% LVR quicker. But you also have to consider that property price could go down, so you may need to pay off more than $60,000 in order to remove the guarantor. So for the person who's buying the house, having a guarantor has many benefits, and that is you don't pay lender's mortgage insurance, you don't have to show genuine savings, you can get into a house with a small deposit and in some cases no deposit, and also the lender will give you a better interest rate because they see you as a low risk and therefore you get their best rates. So there are a lot of benefits that come with having a guarantor, but there is one big old risk that comes with it, and that is if you don't make your loan repayments for any reason, then the lender can not only take your property, but they can also seize the asset that was put up as security for your loan. Now, the lender won't just go out and take your property and the asset that was listed as security on the first default that you do. There is a process behind the scenes, and your property would be the first to go, and only if there's a shortfall would they look for the guarantor's asset if they can't otherwise, or if you guys can't otherwise inject the cash they need. Now, obviously, you should never go into the purchase of a house not intending to meet loan repayments because that's just silly, but life does throw some curveballs, so you gotta consider what happens if you lose your job or if you become sick and you can't work. All of those scenarios aren't anticipated, but they can mean that not only your house is at risk, but also the guarantor's assets are at risk too. So this is a big responsibility that shouldn't be taken lightly. And for anyone that is planning on using a guarantor or that has a guarantor, I would strongly suggest that you make sure you have appropriate life insurance in place and income protection insurance in place, because this mitigates some of those risks to a certain extent. Okay, so now we have some understandings of what a guarantor is. We know the pros and the cons of a guarantor. Now the question, would I recommend you use a guarantor? Before I answer this question, let me take you back to when I purchased my first home. So I bought my first home at age 24 with my girlfriend Abby. Now we bought a fairly reasonable house, a fairly modest house. It wasn't anywhere near what we could spend based on our borrowing capacity at the time, but you know, it ticked a lot of boxes for us in terms of location, being a standalone house, and being very manageable in terms of the mortgage. Now, when we purchased the house, we didn't quite have our 20% deposit, and so Abby's mum kindly offered to go guarantor for us, and we took her up on the offer. And because we had really strong cash flow, we managed to smash down the loan real quickly, and she was off the loan and off the guarantor within 12 months. So for us, it worked out really good. We didn't pay lender's mortgage insurance, we got the best interest rate, and we were able to get rid of the guarantee pretty quickly. But the question is, if I were to go back again, would I do it any differently? And the answer is yes. As I'm getting older, I like to think that I'm getting a little bit wiser, and now I see guarantors as a way to satisfy our impatience. So basically, you hear it all the time that a 20% deposit is such a massive amount of money, and you know, it's the norm in our society to not save up that kind of deposit. The truth is, you're eventually gonna save up that amount of money anyway, because when you purchase the house, you're eventually gonna pay off 20% of the loan, and that's the same thing as saving up a 20% deposit. The only thing is, when you're paying off a loan, you're also paying interest with it. So it's actually harder than saving up a 20% deposit. It does exactly the same thing that a credit card does. It lets us buy things now because we're impatient and we don't want to wait, but we're willing to sacrifice future cash flow and pay for it later. So all a guarantor or LMI is doing is letting us buy that property now. It's satisfying our impatience because no one wants to wait for anything these days. So if I were to do it all over again, or if I were to advise someone that's thinking about a guarantor, my general answer would be no. Roll up your sleeves, save up that 20% deposit, and don't use a guarantor. This is gonna give you good financial habits in the lead up to taking on a mortgage. It's gonna keep you financially independent from other people, which I think is a massive thing. And also you're gonna have a lower loan balance, which means that your minimum repayments are gonna be lower, and you're gonna be able to smash out what loan there is quicker. So these are all really big positive things. And I think a lot of the time people justify the use of a guarantor because they say, well, you know, I've got to get my foot in that property door because property prices are gonna go up. But at the end of the day, this is just speculation, and you know, property prices could easily go down further. We just really don't know. So it's best to work on the factors that you do know rather than speculation. So in summary, there are a lot of benefits of having a guarantor, but at the end of the day, nothing beats good old-fashioned savings. There you're gonna get the same benefits as you do with a guarantor, but you're also gonna be financially independent with a lower loan balance. So for me, savings is the way to go. Now, if you're a first home buyer and you're struggling to save up that 20%, then have a look at the First Home Buyer Super Saver Scheme. And I previously made a video on that, which I'll link in the description below. But that is it for me, guys. Thank you very much for watching. If you like this video, please smash the thumbs up, subscribe if you're new, and I'll see you guys in the next one.